All right, everyone. Welcome to this week's Finquinity podcast. So, I would like to talk about what happened to Bitcoin over the last 2 weeks.
Yeah, Bitcoin's been quite through a journey, and it's not a journey that I think we expect from Bitcoin, especially not when we see the other macro elements do well. Like, for example, we see risk on doing somewhat well with TQQQ, or the NASDAQ rather. We see
Mm-hmm.
semiconductors do really well in the last 2 weeks. And Bitcoin, which is typically being the front run risk on asset, it's just not following the trend.
No, it's not. So, I'm just wondering, like, what's happening here? I think that there is some sort of poor liquidity going on the Twitter FinTwit space. There's a lot of rumors saying how you know the U.S. Treasury is basically sucking up liquidity as it's converting a lot of that cash in the markets into bonds. So there are suspicions here that that might be weakening Bitcoin's price action. But to be honest with you, I don't think that's the main reason. I think that Bitcoin is sniffing out some bearish sentiment that has been pulling the NASDAQ in the last week or so. And actually, on that note, we closed our put trades recently.
Mm-hmm.
And I think it was quite predictable based on our system that the NASDAQ was definitely very overbought.
Yeah, and I think you entered the trades. Was it Monday 22nd, or was it like the Friday that you entered the
I
trade?
think I think it was the 22nd.
Okay, okay, yeah,
Yeah, it was the 22nd or so. But yeah, like I essentially Anchor was basically telling us that TQQ was way in the orange zone, right?
mm-hmm.
Way overbought. So based on our stats, what it takes like 4 to 5 days before it starts to revert to the mean.
Yeah, around 7 for puts for the short
Oh
direction.
yeah, yeah, 7. So 7 for short directions, right? So we just bought some, 7 week out contracts, and we just let it play out as it did, just to be more patient when it comes to shorts. Um, as we noticed, it bounced off the QRM line.
Mm-hmm.
So I think that what this is telling us is, one, there is still bullish. QQ is still very bullish because it didn't go all the way to our blue zone,
Mm-hmm.
and it was some writing on the wall. Like the moment that it kind of hit the KRM line and bounced up, we kind of closed our position because we told ourselves, yeah, it probably bottomed for a bit, and it would not be worth it to risk and hope that it's gonna continue drilling down. Just a reminder to some new listeners, it's far easier to be bullish than be bearish, because markets usually always just go in one direction, which is up, and it's far easier for it to go up. So when you are swimming against the tide, anchor is telling you that it's bullish trend. Market itself is also, like, generally bullish. You should not be so greedy when you're shorting.
Yeah, shorting is always way riskier. So it's better to just hold it for short, and you see your returns. You just take profit and close the trade early. And I think I'm gonna put it back to Bitcoin, is that in the sense that I think in Bitcoin I see like two angles here. One, I kind of agree with you that Bitcoin is maybe potentially sniffing something that is underlying about the market. Number two, actually, is more Bitcoin specific, because typically Bitcoin, because on like the last couple of days, Bitcoin has been, well, going down, and we have seen, however, that Ethereum has been one of the equities that's kind of been behaving differently. It's been, while it also did go down, it's going up a lot faster than
Mhm.
Bitcoin. And I think the entire crypto space is looking a very strange right now. I think we're entering, in my opinion, a unpredictable era of Bitcoin. Maybe it's too early to call, but it's definitely giving off that inclination where for the last year and a half, Bitcoin was a great crypto asset, great asset for risk on sentiment, but now it's feeling less and less so, especially given the last 3 months price action. And I think this has to do with, I think, as you said, the liquidity, because you've had big players in the past, like BlackRock, I think a month or so ago,
Yeah.
that sold a lot of their Bitcoin position to enter Ethereum positions, and that had a pretty big impact on the market for Bitcoin. So I'm wondering, are these movements really a indicator of risk on sentiment, or are they more literally Bitcoin specific, which has not been that relevant for a little while?
Yeah, I think you brought up some good points. Essentially, I agree with you in the sense that there is some sort of capital rotation here. It's time for us to acknowledge that Bitcoin has probably entered an era where it's now more of a mature class asset. It's no longer driven purely by retail or by gamblers anymore.
Mm-hmm.
So you have institutional buyers like MicroStrategies and BlackRock, and Fidelity and whatnot, just entering in, and they're literally connecting people's 401ks and their retirement packages into Bitcoin, right? So the price action now is much more closely aligned with the stock market at large. And rather than doubling and outperforming the stock market by hundreds of percentages in a year now, it's most likely because if it follows more mature capital flow, it's going to perform like any other risk asset at this point. In fact, comparing digital gold, Bitcoin to real gold, right? We see that gold itself has been outperforming Bitcoin over the last recent months. And it's gotten to the point where people are just saying, hey, you know, maybe there's some sort of capital rotation from Bitcoin because people are either taking profits or they think that the risk reward is no longer justifiable for holding such a volatile asset without the returns, and they might be moving back to more traditional assets that have been underbought over the last couple of years or so.
It's quite strange. I mean, I definitely see it. Like gold has been doing really well. At this point, we should call the gold show because every week we talk about gold.
Yeah,
But gold,
we don't buy though. We don't buy gold. We
yeah,
laugh about it. We talk about it. We don't buy it.
yeah, we really should be buying gold at this point. At this point, we really should. Um,
Yeah.
but the thing is, right? Look at gold's price action. You can't tell me that this is the right time to buy gold. Not when it's at all-time highs every day. Not when it's staying in the overbought zone for like a month. And
Hmm.
I don't know. I don't know. I feel like gold has been performing quite straight. I just measured. Gold's up like 42% this the entire year, which is
Uh,
quite surprising. I didn't expect gold to see such a big price movement.
yeah, I think a good portion of that though is due to the Trump administration's chaotic tariff policies
Hmm.
and immigration policies. He's definitely causing inflation. So you have the inflation side of things that are pushing gold up. You also have the fact that he's being, quite reckless with government spending, $2 trillion deficits.
Yeah.
So he's reducing the attractiveness of bonds because there's that debt ceiling, crisis that has to happen like every year, and the fact that inflation is eroding the value of bonds, so it's less worthwhile to to hold coupons to maturity.
Hmm.
The third thing is that the immigration policies, right? When you're deporting, illegal immigration, you are basically lowering the supply and demand curve, and you're making it harder for people to find able-bodied workers, especially for jobs like agriculture or low-end jobs.
Also,
So
the H-1B change, right? There's
yeah,
like the whole other
exactly.
side of. Has that change
Yeah.
been finalized, or has that change is in the discussion phase? What's happening there?
I,
Are you aware?
I'm not. Well, I'm not well versed in the policies on that yet. But from what I've understand is that it seems to be a proclamation, made by the president. Hasn't been really supported by Congress yet, nor the Supreme Court has kind of said, "Oh, this is okay." So I think it's still rough on the edges, and it's probably not baked into the institution yet. But already we're seeing huge effects of the H-1B policy affecting markets that are very sensitive to this, such as India. So if you look at the Nifty, for example, and I almost never bring Nifty up because this is more of an American Canadian podcast.
Right.
The Nifty has been, selling off like nonstop over the last 2 weeks, and it's close to hitting a critical support line. Where if it's below that, it's gonna enter bearish trend. So there seems to be an outsized influence of this policy, not just to the American economy, especially for small businesses and agricultural or medium-sized businesses, but also for countries that are dependent on remittances and sending their people to work in the American economy. So that has been kind of a problem there.
Right.
But either way, though, the point that I'm making is that it's causing a lot of economic anxiety and weakness. The Fed has already cut, so all of these factors basically is fueling the growth of gold. Like this is probably the as bullish as you can get with gold. If you want to go balls deep now. Now is the time. Oh, I wouldn't say now is the time. It's just super overbought. We say this every week. Uh, but but you have every factor lined up. The Fed is cutting. There's economic weakness, and there's inflation. Inflation reaccelerating. Everything is on the books now.
Yeah. I mean, it just seems to me like there's the more chaos in the world, the better gold would do. But that's also very hard to predict, right? But I don't know. I think you're well right. We should just probably slowly DCA into gold and just hold as a
Yeah,
long term asset, especially over the current administration presidency. So yeah, maybe I feel like is the thing is the right time to just buy it gold tomorrow. I don't feel good buying it tomorrow, so I don't know.
yeah.
I don't know
I,
what to
I don't.
say. Maybe the next
Yeah,
KRM bounce. Who knows?
I'll just stick with my calls and QQQ for now, and
Yeah.
let, let's see how that goes. And speaking of calls, I've entered a position into IBIT, so that one will be I think 6 7 weeks out. We'll see how that goes there.
Yeah.
Um, our anchor system is telling us some sort of bounce is imminent. Now, so far, Bitcoin has been a bit weak, but looking at our historical price action, it tends to be weak for the first couple of days after the signal kind of gets sent out, but then it'll begin to grow, like regrow properly
Hmm.
in bullish action. So we have to be patient. I'm quite confident that we're gonna go back to at least I see 1112, 113. So
Yeah. I think I get that same feeling when 112 area.
yeah. Now, our KRM line is kind of getting weak. So,
Hmm.
what are the odds that it's going to breach it and continue going up? I don't know. It'll really depend on how bullish the rest of the market is. If the rest of the market, I think, is bullish, I think it's going to follow as well. But if we see weakness in QQ, for example, that might be a sign that we should just sell off at the KRM line. So, I think that's the biggest takeaway in Bitcoin's price action.
I mean, let's talk
And
about that,
yeah,
right? If we're talking about
yeah,
like if there's weakness in QQQ and the Nasdaq, let's identify where that weakness can come from. Because if I look at next week's data, the most important data is the unemployment rate on Friday. I think there's also job opening data on Tuesday, and
yeah,
so I think obviously the Feds have been concerned about the labor markets. Let's see how the labor markets are doing. Um, and I think otherwise, the other thing is, non-farm payrolls on Friday, unemployment rate on Friday. You also have manufacturing PMI, but that's thing less important because the ISM manufacturing PMI.
yeah.
So
You know, yeah.
yeah, I was gonna say like job openings. If we go above the forecast, is that going to be good or is that going to be bad? Obviously, that's the number one question. Because
I,
you can argue like if the forecast is bad, that's going to be a short term negativity, but then that also at the same time signaling that a second cut is probably imminent in the next meeting, 90 days from now.
yeah, Yeah. So this is what I think. I think that the market is been overly optimistic in how many cuts we have. We have a guy in the Federal Reserve. His name is called Stephen Moran, and basically he's a Trump appointee, right?
Hmm.
So this guy has been pulling the numbers down every time everyone else is hawkish to more cautious to inflation. He's literally saying let's lower rates to 2%. So
Yeah.
because of the fact that decisions are made by a vote, the projections are being dragged down by an outlier, which is him.
Right.
And because of that, the markets are looking at the projections. They are looking at the projections and they're saying, "Oh, look, Fed is being more bullish. Oh no, the Fed is being more dovish this time around." Well, I'd ask myself, well, yeah, of course, because you have like a permadove that is sandbagging the numbers and basically saying, let's have 2% when everyone else is in the 3% handle. So it could be likely that that third cut that's being priced in this year before the end of 2025, that cut might be illusionary because it's probably being misrepresented by an outlier in the Fed projections.
Hmm.
So my biggest worry is that when markets realize, hey, we're not actually going to get a third cut, they're going to push it down the road, and that's going to be reflected in negative price action because the market has been overly optimistic on just how low the Fed will cut before this year will end.
Yeah, I feel like yeah, we're definitely uncertain times, and we're seeing Nasdaq continue to grow. We saw Nasdaq continue to grow even when the data was not all that good. We saw, I think just recently. I'm just gonna pull it up right now because I moved away from the screen. Calendars. Yeah, we saw the GDP hit up 3.8%, up 0.5% from the prediction. This is the GDP growth rate, quarter on quarter final. And so we're seeing the GDP do really well, but labor markets do less well. And so it's again kind of pushing the idea that we're being propped up by investments by corporations as opposed to the spending of the people in the economy. Um, and so that's something I think always there to worry about the underlying strength of the Nasdaq, the underlying strength of the economy. So it's always going to be suspect. I think where am I standing on this? I feel like just looking just purely at the reports that are coming up for next week, I feel like the market should at least press towards all-time highs once again.
Mhm.
I don't necessarily see quite an impedance that might bring it down.
Yeah, yeah, I agree there. I think that provided that nothing bad happens, the market is just going to continue being euphoric for a bit. Going back to the GDP numbers, 3.8% is quite high, right? But we just have to put this into context. It accounts for the fact that in Q1 they basically front loaded all the imports, so that kind of subtracts GDP.
Hmm.
So in the second quarter, the imports are obviously have gone down because there's more inventory, right? So they have to kind of empty the inventory before they reshelve it again.
Yeah,
So so that number 3.8 is a bit skewed because you kind of averages out. It's not like 3.8%. It's more
across
like
the whole
one
year, right? Yeah, because
one
mm,
one and a half, yeah, right over the first two quarters. So I feel that this just continues to show us that one, the economy is slowing down. There's some sort of slowdown happening, and yes, like you're correct in saying that it's being propped up by the mega caps, and we want to see this growth continue. They're gonna have to exponentially increase their AI spending, indefinitely until the rest of the economy can catch up. And we had a conversation about this, but you mentioned how if we didn't include these mega caps, the S&P of I think 490 would be underperforming compared to European and Asian markets. Is that right?
yeah. That's the statistics that I've been seeing floating around. Obviously, I unfortunately have not done my due diligence to verify that fact. But if it is true, then it's a sign that the U.S. economy is not doing too well. If the U.S. with tens of thousands of companies is being propped up and shown to be the market leader, all because of 10 companies, that's not a sign that the U.S. market, the economy, is doing good. It's just a sign that there is, as you said and before in our pre-talk, there's a capital accumulation in the top 10. And these top 10, you have like companies like Nvidia, which are even bigger now than Canada in terms of the economy. So like just their GDP, Canada's GDP versus Nvidia's valuation. So it's
Yeah,
quite crazy.
yeah,
I think
yeah,
I was about to find some statistics. A guy also saw some other interesting one. I'm trying to pull it up right now. And this statistic is very, very, very scary to me. Very, very scary. We actually are. I'm looking at the U.S. debt credit card balance, and we are reaching all time highs. And we are at all time highs for credit card debt balances. So I'm just looking at the GDP doing well. I'm looking at the markets doing well, but the S&P SP 490 not doing so well. The labor market not doing so well, and we see auto loans and credit card balances, sorry, debts, all reach all-time highs and keep going higher and higher. That's just very scary to me. Very, very scary to me. So yeah, definitely some lack of strength, lack of underlying foundational strength in the Nasdaq. But it feels like short term, it's once again a push for all time highs.
yeah, yeah. It's definitely above our KRM line, so it's mostly gonna continue making new highs, if not consolidate here. I would caution buying at these levels because we've seen before that when you're around this level, even if it's above the KRM line, yes, it can continue pushing all time highs. But I'm worried that it needs to consolidate. It needs time to kind of like digest the price action. So there's a
Mm-hmm.
good chance it might come back down, um, back to more sustainable levels. And you're looking at like a 5% pullback or something to go back to those levels. So I think that there is room to be cautious here. And we have to consider that maybe staying in cash and waiting for better opportunities is probably a better option at this point.
Yeah, definitely would have caution. If you're already invested, I don't think it's time to pull out. But I think if you're not invested, definitely be a bit cautious about entering.
Yeah,
And I
exactly.
I think we should probably call it there.
Yeah,
Yeah, it's
yeah. I think we wrapped up everything, haven't we?
yeah. Let's hope for our best. We are long on Bitcoin for the immediate future. We have call options, and hopefully they'll play out. We wish you the best of luck on your trades as well.
Yep.
And a very, very happy September. Typically a red month, but hey, I'll accept a green September any year,
For once.
any decade. Yeah, for once.
Yeah.
Yeah. All right. Thanks everyone. Bye
All
bye.
right.
Thank you for watching.